In this session, we are going to look at another method of depreciation known as the sum of the year's digits method. This method is used when an asset provides more economic benefit in the earlier years of its useful life and less benefit in the later years. Because of this, the depreciation charge is higher at the beginning and reduces over time. For this reason, the sum of the year's digits method is described as an accelerated depreciation method. Assets commonly depreciated using sum of the year's digits are machinery and equipment, vehicles, technology and plant that become less efficient over time. When an asset is new, it is usually more efficient, experiences fewer breakdowns, and generates higher output. Let's now see how this depreciation method works in practice using a full numerical example. A company buys a machine for £12,000. It is expected to be used for 4 years, and at the end of its life, its residual value should be £2,000. So straight away, we identify the amount that will actually be depreciated. We do not depreciate the full cost. We only depreciate the part that will be consumed over time. The depreciable amount is the cost minus the residual value. £12,000 minus £2,000 gives us £10,000. This £10,000 is the total expense that will be spread over the 4 years. Now, instead of spreading it evenly, this method recognises that assets usually provide more benefit in earlier years. So we use a sum of years digits. When we use the sum of years digits method, the numbers 4, 3, 2, 1 simply represent the remaining useful life of the asset at the start of each year. We add those numbers together to create a total weighting base. This total of 10 becomes the denominator in all our depreciation fractions. Now we allocate the £10,000 using those fractions. In year 1, the asset has 4 years of life remaining, so we take 4 over 10 of the depreciable amount. 4 over 10 of £10,000 equals £4,000. In year 2, there are 3 years remaining, so we use 3 over 10. That gives depreciation of £3,000. In year 3, we apply 2 over 10, which is £2,000. And finally, in year 4, only 1 year remains, so 1 over 10, which equals £1,000. Notice the pattern. Depreciation is highest at the start and reduces each year. Let's now look at how depreciation flows through the financial statements over time. Starting at the top, this table shows depreciation in the profit and loss account. There is no depreciation in year 0 because the asset has just been purchased. Then, using the sum of years digits method, year 1 shows a depreciation charge of £4,000. Year 2 shows £3,000 and so on. Each year, only that year's figure appears as an expense in profit or loss. Accumulated depreciation is the running total of all depreciation charged so far. So, after year 1, accumulated depreciation is £4,000. After year 2, it increases to £7,000. After year 3, it becomes £9,000. And by the end of year 4, it reaches £10,000. This figure always increases and never goes back down. Finally, the bottom table shows the net book value of the machine on the balance sheet. Net book value is calculated as cost minus accumulated depreciation. The machine starts at £12,000 in year 0. As depreciation accumulates, the net book value reduces £8,000 after year 1, £5,000 after year 2, £3,000 after year 3, and finally £2,000 after year 4. That final figure equals the residual value, which confirms that the asset has been depreciated correctly. Depreciation hits the profit and loss each year, builds up in accumulated depreciation, and gradually reduces the net book value on the balance sheet. Let's look at how we recognise the depreciation charge for the year and update the accounts accordingly in year 4. First, in the profit and loss account, we record the year 4 depreciation expense of £1,000. This is shown as a debit to depreciation cost because depreciation is an expense that reduces profit for the year. At the same time, we credit accumulated depreciation by £1,000. This increases the total depreciation charged against the machine over its life. Looking at the accumulated depreciation account, you can see depreciation from all 4 years added together. This gives total accumulated depreciation of £10,000 by the end of year 4. On the balance sheet, the machine is still shown at its original cost of £12,000. Below that, we deduct the accumulated depreciation of £10,000, which leaves a net book value of £2,000. In summary, depreciation is charged to profit or loss each year, accumulated depreciation is updated accordingly, and the asset continues to be shown at cost less accumulated depreciation.